a rising gold price is an indication of a failing currency. And so with Wall Street's help, central banks can easily suppress the price of gold and silver so that we don't understand that the currency and the system is failing. But when everybody, this is a con game, so when the public loses confidence and every other layer of confidence above us is gone, bank to bank, central bank to central bank, last August it was Wall Street to central banks. The only level of confidence that yet remains is the public confidence. When that is lost, that's when we will enter the really rapid rate of hyperinflation. And that's also when you will see the overnight revaluations of gold, because gold is the primary currency metal, and it will express or begin to express toward its true fundamental value. So just recently, as example, we saw, I think it was Nigeria they demonetized. What's the other one? Lebanon did an overnight revaluation recently. And so their spot went up more than 1,300% just overnight, right? Take heed, because what we're seeing is this is happening a lot in the emerging markets, where those revaluations and the hyperinflation and the breakdown is occurring, but coming to a theater near you. Use that as the canary in the coal mine and get ready now, because we have a lot of stuff coming up this year, 2023, and we don't even have time to go into it. But we have a lot of stuff that's coming up. My bet is we're going to experience a big, huge black swan crisis. I could be wrong, but I think it'll happen before June 30th because of the LIBOR SOFR switch, which is supposed to be completed by then. Nobody's really talking about it. And this historically has never, ever, 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 ever been attempted. And, these guys are so brilliant and so smart. Sure, they can pull this off. But what happened is LIBOR, which is a London Interbank Offer Rate, is an interest rate benchmark that was created in the 80s and embedded in every single contract that there is. So whether it's your mortgage or your credit card, or your car loan or your student loan or derivatives, which are big leverage bets, this interest rate has been embedded. But it was discovered during the great financial crisis that this was just a stated rate. So you had a handful of banks that get together every morning and go, gee, if I were going to loan you money overnight, this is how much I would charge you. And if I was going to borrow money overnight, this is how much I would be willing to pay. And, shockingly, and I hope you get I'm being completely facetious, it was discovered that traders were manipulating that rate. Oh my goodness, what a shock. And so then the Bank of England came out and said, okay, we are going to end that rate. We have to come up with a new benchmark. And there were a handful of countries that did that. In the US, that new benchmark is called SOFR. The new benchmark does not work the same as the old benchmark. So they did their little accounting gimmicks on it, and they still cannot get the new benchmark to be the same as the old benchmark. Now, why does this matter? Because contracts valuation, so in corporations and banks, are valued based upon that interest rate benchmark. And so it may not matter for one contract, but if you're looking at 600 trillion contracts, that is a tectonic valuation shift in the global banking system. That's huge. Now, can they pull it off? Could I be completely wrong to be so concerned about it? Maybe. I mean, they've been transitioning contracts over to it, but in some cases, you have to get everybody to agree. And the area that is most problematic for them, it's not the mortgages and all that, because the language for them to do whatever they want is in there. And they put in place stopgap measures so that if you or I open our mortgage statement or student loan or auto loan or whatever, and all of a sudden we owe a lot more money than we thought we did, well, you can't sue anybody. You're just screwed. But, you know, in 2008, the freezing of the CDO market, so collateralized debt obligation, collapsed the system. What rose up from that are CLOs, collateralized loan obligations. And they're not liking this because they're getting less money in from the change. And so they're actually fighting it. And that's a huge market. Two key things. They knew more than this, but two key things. Number one, people marry the legal money of the state. So whenever they're making these transitions like we're in right now, they want to keep things looking as normal as possible, okay? And number two, they also knew that since people do not understand inflation, then they're really agreeing to work for a whole lot less money. So my high recommendation is that you do what the elites, those that can write the laws, do for themselves. Now, some of those coins can go for like $13 million for a 1 ounce coin. Not many people can spend $13 million for a 1 ounce of gold, but you can get into the same category for a whole lot less, you know, couple 3,000. Forgive me on this because I don't really work in that area anymore, so I can't be more specific than that. So I want to be in the category of the guy that can spend $8 million or $15 million on an ounce of gold. Because in 33, when they were taking the bullion away from all of the public, they wrote in the loopholes so that those that are in the know and in power actually could continue not just to hold it legally, not just accumulate it legally, but use it in the normal marketplace legally and without oversight. You know, there are a lot of very brilliant people out there, and they talk about the markets like what's happening right now is just sort of kind of normal. I mean, we are getting a lot of the unusual pieces, but the reason why everything seems so cattywampus is like everything else. There is a cycle. In other words, or as example, my granddaughter is turning 9. Well, I can tell you, she is at a different point in her life cycle at 9 years old than I am today at 68 years old. And everything, I don't care what it is, everything has a life cycle.